introduce you to our keynote speakers who are going to be presenting in this webinar. We have Matt Vitale, the joint founder and joint managing director of BIZTOOLS Proprietary Limited from Melbourne, a crowdsource funding intermediary company, a very successful one at this stage. How are you today, Matt?
Yep, well, thanks, Peter.
Surviving in Melbourne.
Only just.
Okay, thank you. And our other speaker is Andrew Geddes, the former chair of Green Cross Limited and a well-known business consultant and mentor to hundreds, if not over 1,000 accounting firms around Australia over the years, and an advisor to various other professional business firms. How are you today, Andrew?
Very well, thank you, Peter.
Okay, well, we'll move on. And I'm Peter Towers, Managing Director of ESS Small Business, and I'm acting as our MC today. If you have any questions during the webinar, if you're watching live, can you go into chat and type in your question, and I will ask Matt or Andrew those questions for you. Or if you're watching this at a later time, or you're one of the people watching us on Facebook Live, you cannot click in onto our chat in a live telecast on Facebook. So can you type in your questions and send them to me via email, and I'll pass them on to Matt or Andrew and get their replies and send them back to you. And we will publish the question and the answers on our ESS Small Business website. So hopefully that has covered those issues. So I'd now like to introduce you to Matt Vitale. And Matt's going to talk about the equity crowdfunding industry and how you can go about getting investment ready. So good afternoon, Matt. And I will switch the system to you. And if you can click on, please, and we'll be on our way.
Here we go.
Thanks, Matt. You're on screen now.
Great. So thanks very much, Peter. Delighted to be here again and talking about equity crowdfunding and how businesses can access this new source of funding and get investment ready to do it. So the reason for equity crowdfunding, or the problem that it really solves, is probably a problem that most of your audience is very familiar with, but funding for early stage businesses has been pretty difficult in Australia for a long time. There's lots of SMEs in Australia, around 900,000, with an annual turnover of between 200,000 and 5 million. And these small companies, they often find it really difficult to raise capital because of their size and scale, their limited track record, and banks are very reluctant to lend to them, despite the incentives that they're being given at the moment. Challenges for companies that capital raising has been time consuming, very expensive. It's largely a relationship driven process. Limited liquidity due to a lack of secondary market for these kinds of investments. For investors, there's very limited data available on companies' performance and high minimum ticket sizes. So typically, an investor wanting to take a diversified approach to early stage businesses, minimum ticket sizes anywhere between $10,000 and $20,000. You need a significant amount of capital to have a diversified portfolio of, say, 5 to 10 investments. And private equity and venture capital funds have a return the fund model. They like to look at particular types of businesses, and this doesn't work well for for a lot of small businesses. It's usually a fraction of businesses that are suitable for funding from some of these professional investors. So just a little bit about BIZTOOLS. We're an equity crowdfunding platform licensed to host offers under Australia's crowdfunding regime. We've hosted over 51 successful offers raising over 31 million since we received our license in January 2018. This is our team here, but my co-founder is Alan Crabb, who co-founded Possible, a reward crowdfunding platform, and Adam Vise, who's our chair, who has over 20 years experience in equity capital markets, many years as head of ECM at ANZ Securities, and currently the treasurer at Australian Unity, which is a health fund. As I mentioned, over 51 successful offers. We have about 55,000 users on the platform. $3 million is the largest deal that we've hosted for Shiva Rideshare last year, and over 21,000 investments. So I thought I'd just go over a little bit the background to the equity crowdfunding regime and some of the key game changes. So it was a pretty long gestation process. 2013 was when CAMAC, the Corporations and Markets Advisory Committee, which is now defunct, but issued a discussion paper on whether Australia should have an equity crowdfunding regime. Interestingly, it had been probably about 2 or 3 years that equity crowdfunding had started in the UK, but it was a very small industry then. And I'm going to talk a little bit about the UK industry, which is the most mature equity crowdfunding industry in the world, in a little while. But then, it took probably about 4 or 5 years of government consultations and back and forth and industry input as to whether or not Australia should have a crowdfunding regime and what the legislation would look like. I think to explain the period, if you cast your mind back, there was quite a few leadership changes, a double dissolution election thrown in there and all sorts of things. And equity crowdfunding just wasn't a huge priority for government. And there are a couple of really significant game changes of the legislation, which kind of explains why it took so long. The first is that small and medium businesses can now access a retail audience of investors, which was something that was previously only allowed for public companies. So proprietary limited companies can now, advertise these offers to a retail audience. Proprietary limited companies can also have a potentially unlimited number of investors. So the previous limit was 50 non-employee shareholders before you needed to convert to a public structure. So that's another significant change. And finally, these offers can be advertised publicly. So by including a short warning, always consider the offer document and general risk warning before investing, you can advertise these offers on any channel, including social media. And this is a far more liberal advertising arrangement than even listed companies have. So it's pretty significant changes to allow what we do. Just some other things that I'd mention about the regime is it's open to Australian proprietary limited companies and unlisted public companies, provided that they have net assets and annual revenue of less than 25 million. Eligible companies can raise up to $5 million through crowdfunding every 12 months. Retail investors are limited to investing $10,000 per company per year. Offers can only be made on a licensed crowdfunding platform like BIZTOOLS, and all offers need to be made under a regulated crowdsourced funding offer document, which is essentially a cut down version of a prospectus. So I just thought I'd chat a little bit about the UK market because it's the most mature and developed market for equity crowdfunding in the world, and certainly in Australia we've got aspirations to achieve a similar size and scale, even if only in proportion to the relative size of the markets. But 2011 was really when things started for equity crowdfunding, and it was, starting, I suppose, globally. So, the Crowdcube, which is one of the largest platforms over there, was doing, a lot of small deals. And when I say small, I mean, £50,000, £20,000, like really micro-sized deals. But it was the first time that this had really been done anywhere in the world. So it was quite innovative. And the UK has far more liberal securities regime than Australia's does. So there was certainly a lot of latitude for these platforms to start and raise capital, help companies raise capital online. And then around 2013, the FCA decided that they needed to regulate this new form of fundraising. So they're called financial promotions in the UK, and the regime has gone on from strength to strength, and it is a very credible and popular way for early stage businesses to raise capital in the UK. I think there's a stat that 75% of all startups that are of a certain size have used equity crowdfunding at some point to fund their development. And it's become a very institutionalized funding source as well. So anecdotally, what we're hearing is that a lot of professional investors in the UK started realizing that there were deals on equity crowdfunding platforms that they hadn't come across with their own personal networks. So a lot of them have just decided to look at equity crowdfunding platforms to source deals and just decide the ones that they want to engage with. And certainly we're seeing the beginnings of that in Australia, but we're hopeful and expect that will only increase over time. These stats are a little bit old. They're from last year, but it's important to show the size of the market in any case. But approximately well over £400 million was raised in the UK last year through equity crowdfunding. Almost all of it on the two major platforms, Seedrs and Crowdcube. The market share has changed a little bit since then. We track UK data as well. So Crowdcube has kind of, leveled up the score, if you like, this year, but it's been very interesting to watch it during COVID. But yes, it's a market that's dominated by two players. So we've published some data on the performance of the Australian equity crowdfunding regime for the 2018 and 2018-19 and 19-20 financial years. And pleased to say that despite the impacts of COVID, really affecting performance in the last two quarters of last financial year, we were still able to achieve, I suppose, flat growth, if you like, for funds raised, but about 40% growth in terms of successful deals. And that's a trend that we were expecting to continue anyway, that the average raise sizes would perhaps decrease for a while as more companies were accessing crowdfunding and, doing smaller deals, which certainly we're still delighted to host on the platform. There was, a slight increase in the number of investors. So about almost 14,000 investors last year in those 45 deals. And interestingly, there was a 30% decrease in unsuccessful deals, with only 9 unsuccessful deals last year. And I think that's probably something that we expect to increase or decrease, if you like, as well as, as the platforms become more experienced and the people raising funds, I suppose, become, better at the process. So just talking about the Australian market at the moment, delighted to say that the Birchall has hosted the most of any of the platforms. There's about, I think, 15 or 16 organisations that license to host crowdfunding offers, but really, all of the deal flow seems to have consolidated to 3 platforms. So there's ourselves, Equitise, and On Market. But Birchall has, last year certainly raised the most of any platform. And, delighted to also say that of the top 10 offers last year, Birchall hosted all but one of them. So just chatting a little bit about our platform now, we've got a front and back end system that's designed to make the process of investing simple, easy, and fast. We spend a lot of time on the user experience, and we hear from investors all the time that it's a nice, seamless process for them to invest in. But we also have a very powerful back end for companies that are making crowdfunding offers to track the performance of their campaign by looking at investors that are making expressions of interest, how many times they visit the page, and things like that. Just chatting about our process now. So it's roughly a 8 to 10 week process. We allow about 2 weeks to set up a company profile and then basically agree the plans for executing the crowdfunding campaign. And then the campaign's broken up in 2 stages. We run every company through an expression of interest stage. That will take about 3 to 4 weeks, increasingly 3 weeks. And then the offer runs for about 3 to 4 weeks as well. And the offer's in quick succession to the expression of interest campaign. Now, during the EOI stage, what we're doing is trying to get non-binding indications of interest from investors. They're telling us important things like why they're interested in the offer, what kind of investor they are, but most importantly, how much they'd be willing to invest. This is really useful data for us because having completed over 50 offers, we can give companies some pretty rigorous guidance on how much demand exists out there for their offer by looking back at what EOI performance produced, what level of investment when they got to the offer stage. And this is really useful, particularly for setting things like minimum and maximum targets. There's a lot of psychology with equity crowdfunding, indeed with any capital raising, momentum, traction. So it's important that you are organized and that you know where the early money is coming from, and then you leverage that early support for more success. The other comment that I'd make is, despite that Virtual has a very big list of investors that have invested in offers, that's not our core proposition or selling point for businesses that we work with. We decide to focus on, or where we make the most impact is working with each company as a discrete project and identifying or helping them identify the most relevant audience for their offer. So each campaign is a new deal, a new project that making full use of the relaxed advertising restrictions. Our goal is to show their opportunity to a relevant audience in the most efficient and cost-effective way. And in that sense, our Virtual's database is really the accumulation of all of the previous offers that we've hosted before. So we won't say to businesses, we've got a list of investors that are just itching to invest in your deal. There may in fact be many investors that are interested, but where we make all the impact is working with companies to find the most relevant audience. And it's made a lot easier through being able to advertise these offers. So as mentioned before, we've hosted over 50 successful offers. It's been across a range of different industries. We like to work with businesses that have a strong consumer proposition. So, in the environment that we're in and, dealing with the law that we have or the game-changing features of the crowdfunding legislation, we feel that businesses that have the ability to access or motivate an audience to invest are the ones that we want to work with. Now, it's not all craft breweries, which is a question that comes up all the time. We've hosted several offers for craft breweries, and they've done really well, and we're delighted to host more of them. I love craft beer myself, and we take the view that someone that drinks the beer might also like to invest in the business. But we've also hosted offers for B2B companies or companies that you wouldn't ordinarily or automatically think are appropriate for crowdfunding. One example I like to give often is Advisor Ratings. So Advisor Ratings is essentially a data business for the wealth management industry. And 65% of the people that invested in that offer were financial planners. And with that, that industry going through a very difficult few years with the Hayne Royal Commission and so on, they built an audience around their business, people that saw Advisor Ratings as part of the solution, something that could actually, lift the industry up. We've hosted several follow-on offers for companies. So Sheba we've hosted a second offer for Sheba. Advisor Ratings, as I just mentioned, and Capricorn Power, we have a second offer live for them at the moment. They're very close to their 600,000 maximum target, and it closes tomorrow night. So if anyone's interested, they can check out Capricorn Power. That's closing tomorrow. we've also hosted several second offers from for companies that had completed their first offers on other platforms. So some of the things for companies to bear in mind when they're considering doing equity crowdfunding is that we can't raise money for businesses that are investment companies. So the restriction is that you can't raise money to invest in other entities or schemes, and this can be problematic for some businesses in the way that they're structured. But the policy behind this is there are other regimes or other arrangements for investment companies to raise capital, and that this is being a retail regime, investors should know what it is that they're investing into, rather than assessing the ability of the investment manager to make investments. Retail investors need to assess the business on its merits and decide on that basis. Shareholders agreements, if companies have, it's quite common for proprietary limited companies to have a shareholders agreement in place, but it's actually problematic for crowdfunding. Ours is an entirely online process, and shareholders agreements, they're drafted as deeds, so they usually require wet ink, despite that they've made some amendments to execution arrangements because of COVID. We don't expect these arrangements to continue, unfortunately, so it's still a problem. So most companies will update their constitution and just stick with the one document and in fact terminate their shareholders deed. But that's some legal work that all companies usually need before they make a crowdfunding offer. It's also important to be mindful of the investment restrictions. So I mentioned that $10,000 per retail investor per company per year. Wholesale investors can actually invest over that limit. And the way that Birchall chooses to determine someone's wholesale status is with an accountant's certificate. So showing that they've got greater than $2.5 million in investable assets, greater than $250,000 in gross income for the last 2 financial years. And the certificate must have been issued within the previous 6 months. And I often get questions from accountants, questions from companies via their accountants about this. So there is an education process out there, but there's certainly a role for accountants to do in helping their clients that want to invest in these opportunities. And financial statements, it's another point that often comes up with accountants, is that the 4 key financial statements need to be included in crowdfunding offer documents. So most proprietary limited companies, because they're not preparing statutory accounts, they won't have a cash flow statement or a statement of changes in equity. But we need these things for offer documents. So despite that a company doesn't ordinarily have them, they need sometimes a little bit of additional work just to make sure that they have all of these and include them in the offer document. The minimum requirement is the most recently completed financial year. When we get to January, February, those financial statements are about 6 or 7 months out of date. So most companies will update with management accounts, which is fine. And I've just included a couple of examples of case studies here. So Sheba and Chief Products, just to show that we host very significant offers. So Sheba Rideshare's $3 million offer. Posted several offers for dollars. Then Chips is another one. They're a Queensland-based business, an aftermarket auto parts for their Jeep Grand Cherokee, and they raised $250,000 in March last year, and from 120 investors. So, and just finishing up on COVID and the activity of in the crowdfunding industry and on our platform. We've been the most active platform through this COVID period, which it's been great to be busy during this period, and certainly to be helping businesses getting money during a difficult time. There's a list of our funded offers here. We have several currently live. Capricorn Power, XY Advisor, and Blue Springwater, which is another Queensland-based business. And that's all I have. So thanks very much. Happy to answer any questions.
Thank you very much, Matt. Andrew, have you got any questions you'd like to put to Matt?
No, that was really good. I got quite a bit of information from that. You'll send out some slides at the end, Peter, I assume, like you do with me. So that's good.
Yeah.
No, very interesting, Matt. Nice to see it's buoyant and lots of raisings on the go,
Thank you, Andrew.
despite COVID, which is great.
Yeah, it's look, any capital raised in this environment is tremendous, and
Yes.
we've been able to stay busy, and it's been very fulfilling, being able to help lots of small businesses raise capital during these times. So
yes, great. Matt, I have a couple of questions though. The legislation gives you 90 days in which to accept the offers. Is the expression of interest period part of that 90 days?
No.
Oh, okay. So a company could still go for 90 days.
They could.
Okay.
In our experience, though, it's 90 days is a very long period of time for a capital raise. The other thing is, if something happens to your business during that time, good or bad, you need to, if it's material, you need to update the offer document and update investors. And if it's bad, you have to give everyone 14 days to change their mind, to cool off.
Okay.
So the longer that you're open, the greater the risk is that you'll be in a situation like that.
Okay. And the other comment I was going to make was relative to shareholders' agreements. Are you aware of any of the shelf company businesses starting to prepare a constitution that for a private company that fits the crowdsource funding model?
No, I don't know that anyone's offering this off the shelf as a template, but there are several law firms that have worked with numerous businesses that we've hosted that I dare say they're capable at doing this work now. So there's a few precedents, if you like, floating around at law firms, but no one's released this to the market. And the things that companies need to look out for are things like preemptive rights, drag along and tag alongs, all of these things that you might change how you feel about your governance arrangements when you're going to end up with potentially hundreds or thousands of shareholders. So it's a good time to revisit these things.
Yeah. Okay. And there was another question, but it's now escaped me. I'm sorry. So thank you very much, Matt.
Pleasure.
Are you going to remain with us today, or
Sure.
you're available? Okay,
yeah,
that's
absolutely.
very good. Okay, we're now going to say thank you very much. And if you've got any questions based on what Andrew is going to talk about, you're most welcome to ask those at the end of his presentation.
Thank you.
If it's a big issue, just ask him during his presentation. So I'm just going to switch back now, and well, you're there, Andrew. We're ready to go.
Yes, I've.
Okay, so it's my pleasure to introduce Andrew Geddes, who is going to talk to you about the challenges facing SMEs in this post-COVID-19 environment. Thanks, Andrew.
Thanks, Peter. Hello, everyone. I don't know if it's a post-COVID environment yet, because it seems to be still with us very strongly in some areas. But the one thing that is certain is that the economic situation is changing. Consumer attitudes, their habits, their lifestyle, they're changing. Demand and supply is up or down in various sectors, and it's up in some and down in others. And the government keeps bringing in different regulations, of course. So what I'd like to do today is just provide you with some checklists that might help you with thinking about the way you're planning and communicating within your small business. Peter will make a set of these PowerPoint slides available, and you could use them in that way. There's a need, we believe, to refocus on your core business and simplify what you're doing and improve your offering to your customers in your core areas so that you're seen as more efficient and hopefully better than your competitors. So the sort of things that I'm going to cover today are listed on the first slide. I won't go with them through all of them, but we'll work our way through each of those 9 steps as we go. I'm going to go pretty quickly because we don't have a lot of time. Again, it's something for you to use later on with your team. So the starting point for all of us was to go, okay, COVID's hit. In some cases, businesses, their sales dropped dramatically, particularly in education, tourism. I had an accounting firm that specialised in hospitality clients. Of course, they lost half their clients through, they've actually gone bankrupt. So most of us had a situation where we went, how much cash have we got? How much are we invoicing and collecting at the moment? What has COVID done to us? What will the government, the bank, the landlords, our software suppliers do for us? And what have we got to do to put in signage and make sure we've got procedures to keep both our employees, our team happy and safe, and our customers happy and safe? So we went through that process. One of the things that drove that was let's lift our communication, because the team were freaking out with uncertainty, as were customers. So it really meant that as management, we have to spend more time running more meetings and being seen and asking questions and answering and changing our pattern of meetings. Every customer touch point had to be reviewed. Well, it had to be reworked so that there was social distancing and these other requirements. And again, what's being driven at us is we've got to simplify our processes and share the learnings in the company and drive it across all of those customer touch points. So to try and do this by yourself is impossible, particularly in the smaller businesses. So setting up a senior leadership team, and in some of our very small businesses, it's really been the whole team. And we've gone, we need to get, every day we need to have a daily stand-up 5-minute debrief with each customer-facing person, and then to take that to the whole team and look at what's come out of that. What do we need to do to improve our business or simplify it, get rid of wastage, cut out duplications and other things. So that's what's been driven at us. Now, given the amount of change that's occurring out there, if I go back one, we're really looking at getting the core business fundamentals really efficient, reducing waste, eliminating non-essential processes, and that's the focus of the senior leadership team. Now, depending on the sector you're in, are you up or down? Let's just look at driving change through the business so that it's not threatening to the team members. You got to be more flexible in your thinking. Just because it worked in the past doesn't mean it will be now. My saying is, don't be a slave to traditional thinking, and be prepared to be quiet. Owners, you need to shut up and listen to your team, if I can be that blunt. Don't think you've got it all. You need your perspectives of what's going on and what's in the mind of your customers. You need to hear that from different sources and different perspectives. So what we've done is to look at what are the revenue streams within each business, who are the ideal customers that we want. If they're difficult or they're price resisting, we're going, well, perhaps we should take our focus away from them and let's look at the ideal customers. Now, to get a feel for what your clients or customers want at the moment, we suggest you ask 4 things. One is, why have you come to us? What do our products or services do? And secondly, what's the outcome you're after? That gives you an insight into the physical, why they're there and what they want. But the 2 that helps drive your brand DNA is, how does that make you feel and how does that make you look? And that needs to be driven into your digital marketing stories and branding marketing messages. So let me give you some examples of that. I'm the external chairman of a large surveying company in northwest Sydney. It's won a national award for the best surveying business 2 years running. So it's very progressive. We had our office manager, a 35-year-old woman, ring 30 of our commercial clients. Now, we only have private sector clients, no government clients, because government wants a tender process. They focus on the cheapest job, and consequently, we find that we can't deliver to them, and we have decided we don't want to work so much with them. So we rang our private clients and we asked them, why do you come to us? Now, a lot of them were middle management project managers in big corporations. They were either development companies or they were in builders. And their answers were, well, we come to you for saying, you idiot, for surveying, you idiots. Why are you asking that? It's obvious why we're coming. And we said, well, what's the outcome you want? And they said, well, we want our development applications approved. We want our title registrations occurring on time and with no delays. And then when we asked, how does it make you feel? They said, oh, assured, confident, in control. And how does that make you look? And they said, well, very professional. I get ahead in my organisation. Now, this meant that in our marketing activities, that's what we had to stress. We also realised that we didn't have to discount to win work. Now, the surveying profession is filled with firms who are in panic mode, run by managers who are in total fear for the future, and they're discounting like mad to try and win work. We've had, our last 3 months have been the best ever in terms of the amount of work we've done, and we haven't discounted a single job. In fact, now we say we guarantee to be on time, on budget, on quality, and on relationship. However, we're more expensive than anyone else in the market, and we've lost no work that we didn't want to lose. So it's very interesting when you ask those questions. We then asked the same questions for a new IT startup called Etivity News. This is a digital Australian publication that has stories about consumers, Australian farmers and food processors. It's focused towards giving that information to consumers so that they're in the know. There's also a media company that sits behind it and produces video promotions for the food companies and the farmers. Now, when we asked our small producers, what do we do for you? They said, well, you put stories about us on the web. And what are you looking for from that? They said, sales. How does it make you feel? They said, more confident about the future. And how does it make you look? They said, modern. And they said, that then attracts consumers. We asked them, what are you looking for? And they said, well, we want to know where to get the good stuff. You know, it's clean, it's green, it's been ethically produced. They wanted to get ideas for cooking at home. There's been an increase in that. That's an example of a changing consumer habitual trend. They wanted to purchase online. They wanted to know about health. And then we asked them, how does it make you feel? Knowledgeable. How does it make you look? Cool. So we created a website news company that then was able to put stories up on food growers, producers, distributors that attracted consumers in the know. And then we started to produce media production work to feed it. So there's an IT startup that started as COVID hit, and it has grown consistently, not as well as we hoped it might, but it's still growing consistently, and it's based on marketing and positioning based on the last two brand DNA questions. How does it make you feel? How does it make you look? The research suggests that consumers are making purchasing decisions based on those emotions rather than just the facts of what is it that you're buying and what's the outcome you want. Further research in this area that helps you with your strategy rethink comes from the Australian Institute of Company Directors, where they looked at all the research that had been done in the last 3 months and created 6 suggestions. They said, get your consumer-facing staff to ask those questions and get that feedback and drive it into your new services development. I mean, an example that immediately grabs me, and Peter, would relate to this, the accounting profession. I keep speaking with small businesses who say, I want to get into cloud accounting. I want the various business apps that link into that so that I can automate my bookkeeping and the production of information so my accountants can do the compliance stuff easily, and I've got information at my fingertips as to how I'm going. And the accounting firms that can't help you get into cloud accounting, the industry-specific applications, and to automate your bookkeeping and other admin procedures are losing clients in droves. It's a trend that is transforming the accounting profession as we speak, and it's all based on listen to your clients and respond.
Yeah.
The second thing that the AICD research came up with was, what about your value proposition? A couple of sentences or a single sentence that expresses what you do. Since COVID-19 lockdowns, consumers want more trust, reassurance, a hyper-local emphasis, and a human at the end of the line. So my environmental engineering manufacturing firm in Newcastle has a message about they produce industrial products to help with oil spills, to help with wash bay areas. So they've got some slogans that we keep Australia clean, we employ local, and we build our cleaning solutions here with our own team. So it's seen as a business that is entrenched in the area, employing locals, doing local stuff, and consequently the loyalty to it has lifted with people. The repeat visits has been lifting in this difficult time. The next piece was, don't stop marketing spend. It's easy to cut it, but at the moment, refine your marketing message by understanding how your clients feel and look, and then make sure that you're noisier than your competitors. It's very important. And then start thinking about, what are the trends that are coming? Look at real estate, particularly your area, Matt, with lockdown in Melbourne, people can't go and visit properties. What's happening with the buying and selling of real estate? Well, we've now got, we have online auctions occurring. We've got buyers advocates. We have scans of properties, and then we have that put into plans, and you can have a virtual tour as if you're flying a drone through the property. I suspect that this trend is going to revolutionise domestic real estate sales in this country, and those agents who don't get with it are not going to be here. Or look at what's happened with the Royal Commission into banking and financial services. The charging of commission is now illegal. So the old-fashioned life insurance advisors who relied on commissions are struggling to work out how to price their products, and they're not going to be here if they don't look at, what do our customers want, how do they judge value, and how are we going to respond to this. Then, as I said, if you discount, you're going to really struggle to bring your prices back up. So if you can provide value in different ways, I would suggest that you do that rather than drop your prices. I would even encourage my firms as their chairman to say, I'm happy for sales to fall 10, 20% as long as profit doesn't fall. So you need to think carefully about what that means. You can do less work with less customers as long as your margins are there. And when demand improves, you can regrow at the right margin. And finally, you've got to be safe and be seen to be safe. So all physical touch points have to be dealt with according to the law, but make sure you've got clear and easy to understand signage, so that when our customers come in, it's easy to work out what we should do and how we should do it. I've just flown to Darwin, spent days up there, hopped on the GAN and gone to Adelaide, had a few days off in McLaren Vale and come home. Now, everywhere I went, it was open for business, and the signage was there. In South Australia, they have public COVID, how can I call them? They're lay members of the public who've been given a tag, and they encourage in the public places social distancing. So, and they wear lanyards so you know who they are, and they're very polite, and they're just saying we need to keep safe. And it's an example of what we need to do in our businesses. So research from the Australian Institute of Company Directors is suggesting that we should think through all of these 6 areas in development of our strategies. And then with our senior leadership team, let's put that into our strategic planning framework and think about, where are we now? What are our strengths, weaknesses, opportunities, and not threats, but what are the trends that are changing in our sector, our industry, and what do we want to look like in 6 months, 12 months, 3 years? And then with our senior leadership team, what are the 2 or 3 things we've got to nail to get us there? So this is where we find that if we talk to our customer-facing people every day for a few minutes, each one of them, what's happened, what was good, what was bad, what customers were happy, which ones were sad, what were the complaints. Does that throw a focus on needing to change how we do it? For example, I went and had a total hip replacement operation. My anaesthetist sent me an email saying, here's your invoice. I've gone to Bupa and been paid by them because I gave them my Bupa number. I've gone to Medicare and been paid by them because I gave them my Medicare number. And then he said, here's the invoice for the balance, $147. And he said, ring up and use your bank card. So I did, or my Visa card. Now, I then went to my surgeon who said, oh, we don't have that. What you've got to do is fill these forms in, take it to Medicare, then you've got to go to Bupa, and then the rest, here's, you come and pay us. And I went, hang on, here's what my anaesthetist did. Why don't you offer that? Oh, well, we don't. I said, I think you should, because it's too hard what you're asking me to do, So my wife went off and she queued in the Medicare office, and 45 minutes later was told, you're in the wrong queue, love, go to the next one, another 45 minutes. So I had a rather feisty partner there for a bit saying, next time you go. And I said, well, I'm not allowed to go down the stairs. And she said, aren't you lucky? By the way, my surgeon now has changed the processes and can do what my anaesthetist was offering. Interesting, isn't it?
Yeah, it's very interesting, Andrew. Yeah.
It's just an example of making it easy to do business with you by getting with the new technology that's available and not being arrogant and thinking that, your customers don't have a choice to go elsewhere. So what are the three things that you and your senior leadership team, by the way, my point is this, I spoke to the woman in reception and showed her the anaesthetist's letter and said, there's the way they do it, here's how you do it. And I said, would you mind taking that to the boss? And I said, I've mentioned it to him. And she said, yeah, but it's his wife who runs it. And I went, well, how about you give her all this and let's see what happens. So it was a customer facing person who got feedback from me. I delivered it politely and calmly, and they listened and made the changes, which I think is really good. So what are the three things you've got to get done in your business? It may be a suggestion from one of your customer facing people. And if you're going to set a project group up to create the changes, it doesn't have to be you that drive it. It could be one of your team members. So we suggest that you run a project group and ask them to meet at a set time each week and to create a list of actions. So it might be, we need to revamp our website with a new marketing message. Well, item one, contact the current website host, or item two, design some new copy based on our customer feedback, what our new strategic goals are, and I guess, what are the words that are going to, I guess, ring bells and connect with our customers. So a whole bunch of actions, who's going to do it, by when, and begin to meet each week and drive that project group along. You don't have to be the one that does all these things. In fact, often your team members love to be involved in trying to help and improve things internally. And then, I guess in summary, we then throw all of that into the scaling up framework of, talk to your team about what you're trying to achieve in 6 months, 12 months, 3 years. Make sure you've got a clear statement of purpose, why you do what you do. Make sure that the focus of the business is on your core and it's the outcome that the outcomes your customers want that is driving you. Set some core values that will determine what's acceptable behavior and attitude and not acceptable behavior and attitude, and use that to work with your people on who should stay with you and who really needs to have their career alternatives freed up. Then, what are the three things we've got to nail? Who's going to drive that? What meetings will we have? One thing that's happened in the last 6 months is we're meeting more often. The pulse of reviewing, communicating, planning, resetting targets, it's happening more quickly.
Yeah.
I'm finding I'm having weekly and monthly sessions with my managing directors, and I'm asking them to, for example, 5-minute stand-ups daily with their direct reports. So we're pattern of meetings, we're pulsing more quickly. the question of governance is, do you have an advisory board? Is it now monthly instead of quarterly? Have you got a senior leadership team? Are they meeting weekly rather than monthly? Have you got project groups? Have you got daily stand-ups? The pattern of meetings and your method of governance are interrelated. And we've talked about making project groups work and when you should do them. So when are those meetings going to occur? Are they in your diary? Does everyone know when they're on? And I mean, are you just going to work and responding to email and phone calls and staff queries and concerns and customer complaints, and it's just a big jumbled mess of stress and harassment? Or are you doing set things at set times? Daily stand-up meetings first thing in the morning, maybe a weekly project group involvement by you Thursday Arvo, maybe a weekly job organising meeting or sales meeting, maybe a Friday afternoon review of what's happened, maybe a senior leadership team fortnightly. I mean, where can you create some new work habits so that you're communicating with more discipline more often? So create greater discipline and increase your business communication pulse. Focus on your core business, make it sing, cut unnecessary processes and waste, listen to your customer-facing team members, and then transform your business processes across your functional areas. That's what the change of consumer attitudes, the COVID lockdown, is driving at us, and you ignore this to your own risk. So I've tried to walk us through the 1, 2, 3, 4, 5, 6, 7, 8, 9 items there. I'd like you to use these as a checklist and talk to your senior leadership team and think, there's some refinements that you need to do. And I hope, Peter, that might be helpful for everyone in sharing what has happened to me and my involvement with my various businesses over the last 6 months. I don't think I've ever worked so hard, to be quite honest, and I've done most of it from home on my laptop, looking at the faces of people in little matchboxes, just like we're doing right now.
Yeah.
I hope that's value for you, everybody, and it wasn't too quick.
Thank you very much, Andrew. That was very interesting. Matt, have you got any questions or comments on what Andrew's had to say?
Look, just a couple of comments. I thought it was a fantastic presentation. I suppose being a tech business, the stand-up is pretty important for us. We actually have a debrief or a stand down every day, which we've found is really helped us with working from home. So like everyone's...
Do you do that at the end of the day, Matt?
Yeah, at the end of the day, we have a really short one at the end of the day, just to kind of chat about how effective we've been and just to revisit what we talked about at the start of the day as well. But
and who's involved in that, Matt? The whole team, or just you and Alan? Or
no, we're a small team, so it's quite fortunate that all of us can be on these stand-up meetings, which is
very good. Nice refinement. I like it. End of the day, what's happened?
Yeah.
What do we got to do tomorrow?
Yeah, that's right. It's a nice addition when you're working from home, I think. And then that way, I think the other thing was, it's recommended that you should be catching up with team members at least twice a day when you're working remotely. And I mean, our lives in Melbourne still, and the stand up and stand down is is a pretty good way to cover that off. But other than that, it's fantastic presentation. Really great advice. Thank you, Andrew.
Thank you, Matt.
Yes, thank you very much, Andrew. It's an interesting area, and I think you've summarised it very well, as you always do, in trying to make people aware of the issues. COVID has changed a lot of things, and I don't think we're going back to the old days. No, it's a whole new ball game. So thank you very much, and we'll just go back to my screen so we can wrap up this presentation today. And I want to give you the JobKeeper update. The Parliament has passed and the Treasurer has now introduced the new rules for JobKeeper from the 28th of September, which is, as you know, was the end date on the original plan that the government outlined about 6 months ago. So in the next period of JobKeeper to the 3rd of January, the determining factor is going to be on your team members who work for more than 80 hours in the 28 period from either the 1st of March or from the 1st of July. And those people will receive $1,200 per fortnight, or the company will receive that amount of money. Bear in mind that currently that is $1,500 per fortnight. So that's reducing by $300. All other employees, so those working less than 80 hours in that 28-day period, the payment is $750. So we haven't got the 20 hours demarcation that was in operation up until now. It's changing. The rules stipulate that a business could qualify for JobKeeper now, even though they may not have been able to qualify for JobKeeper previously. Now, this is going to be very welcome, I imagine, Matt, in Victoria, where unfortunately, I guess that there's large numbers of businesses that have suffered the 30% drop in turnover during this current quarter, even though they were not eligible to receive any JobKeeper payments previously, they could be now. And they should be getting these calculations done as soon as the month finishes, so they can lodge their details with the government. The work hours include all types of hours that anyone's been paid for. So it's annual leave, long service leave, sick and carers pay, and absence for public holidays. So if someone's on the payroll, those hours are counted in the determination of the 80 hours. For eligible business participants, these are the sole traders and directors and trustees who have also been eligible to receive JobKeeper up until now. If their business had a drop of 30%, there has been some change. The reference period, I thought it's surprising. I don't really know why, but it's still February 2020. And the test will determine which of the hourly rates that a business person is going to be paid on. It gets back to what they've been doing. So are they, first of all, and as this webinar is directed at business people, are you actively involved in operating your business? Are you undertaking specific tasks in business development and planning? The very issues Andrew's just been talking about. And obviously, if you're contemplating raising funds using crowdsourced funding, the type of issues that Matt was referring to. But this is all backdated to February, so it's obviously you had to be thinking about it back then. Regulatory compliance, taxation type matters, similar activities in that period. Now, the actual decline in turnover test for the September quarter is for the majority of people in small businesses. There needs to be a 30% drop in turnover in the September 2020 quarter as compared to the September 2019 quarter. And if you're involved in a charity, and many of you probably are, the test for charities is 15%. And if you're in the big end of town and you've got turnover over $1 billion, you need to have achieved a 50% drop in turnover to be eligible, because the government thinks that you've got other avenues of raising money. You do have to notify the tax office of the employees that you believe are entitled, that you're entitled to draw on, and you've also got to notify the employee within 7 days that you have lodged the JobKeeper forms and that you've assessed that they've qualified on the more than 80 hours in the 28 days basis, and therefore you're going to be paying them the $1,200, or they're going to be paid the $750. So hopefully that gives you some food for thought. Very quickly, an action plan. Are you interested in scaling up or taking your business down the path that Andrew was referring to, getting your leadership team appointed, if you haven't already got one, a formal one, and then geared up, ready to operate your business. Are you interested in exploring further what Matt was talking to you today about, of being able to take this opportunity for a private company to be able to raise money through crowdsourced funding, equity raising? If you've got views on either of those subjects, of course, now is the time to start your planning process. And if you want to know more, we suggest you talk to your accountant, and you can contact us. And you could find out more about crowdsourced funding by going on to Matt's website at www.birchal.com.au, or you can send us information on the items that Andrew was referring to, and I will pass them on to him. So that's the wrap up for today. We have utilised our time, so thank you very much for being with us. Matt, thank you very much for your presentation today.
Thank you. Thanks for having me.
And Andrew, thank you very much for you being with us again. Andrew is one of our affiliates and has participated in these presentations on a number of occasions. So thank you, Andrew.
Pleasure, Peter. Thank you.
And to you people watching us, I know many of you look at these recordings at a time to suit yourself. Please enjoy. Don't pick up the phone to ring me if you're watching them in the wee hours of the morning, please. But you're most welcome to send us an email, and I will pass those questions that you have for us on to Matt and Andrew. In the meantime, stay safe, and we hope, Matt, a message to your colleagues in Melbourne, the business people of Melbourne and the wider Victorian community. We're all thinking about you. We hope that you can get out of this real problem that you have at present, so you can get back into running your businesses and creating employment in the not too distant future. So to everyone, thank you very much and have a great day. Goodbye.
Thanks, Peter.
And thank you very much, Matt.
Thanks, Peter.
Thank you, Andrew. Goodbye.
Yeah.